Good morning, students. Now, this is the part 3 of journal. In the part 3 of journal, we will be doing journal actually. First of all, we will be studying what is journal. The journal is nothing but a book of primary account, a primary book where accounts or transactions are first recorded in a chronological order. Over here, this primary book is the word is very important. A book which is so very main book, primary book, main book, most important book, where transactions are first recorded in a chronological order. Chronological means date wise, like January 1st, then January 2nd, then January 3rd, or April 1st, then April 2nd, then April 3rd, all of April 1st transactions, then all of April 2nd transaction, like that. That is called chronological order. It is called book of original entry, and the process of recording transactions is called journalizing. It is a book of original entry. That means as soon as the transaction occurs, we record it in the journal and nowhere else. First, we record it in the journal. The transactions are recorded, and this process of recording is called journalizing. Let's see the book, the format of journal. In the books of in the books of in the books of Amit, Sumit, Ali, Ram, whatever, in the books of dash, journal entries, first column is the date column, then we have particulars column, then we have ledger folio that indicates the page number of the ledger. Actually, from here only we transfer or we post the transactions to yet another book called ledger, which we will be learning after this chapter. Then we have debit amount and credit amount. These are the 5 columns in this journal. This is the format of journal. Let's understand some advantages of journal. See, the first advantages of journal is journal provides an explanation to an entry by way of narration. Whenever we will write journal, then we have to give a narration also. That what is this journal all about? What is this transaction we have recorded? It reduces the possibility of errors as everything we record in the double entry principle. By journal, the double entry principle is recorded very nicely and it reduces the possibility of errors that both the aspects of transactions are recorded. Next, journal are of 2 types, that is compound journal entry and single journal entry. I'll give you example over here. Sold goods to Ram or started business with, see this one, cash to capital is a journal. Started business with cash rupees 1 lakh is a example of journal. This example is a simple journal entry. See, I have not given the narration. Actually, I should have written the narration also over here. The narration would have been like this: being started business, being started business, being started business. This would have been the journal. This would have been the narration. This narration should have been also there. This is called narration, that explanation of the journal entry, explanation of the transactions through journal entry. So that is the simple journal entry. Now we have compound journal entry. Compound journal entry, if suppose not only cash, we would have started our business with cash 1 lakh as well as stock of 20,000. Suppose stock, S-T-O-C-K, stock also of 20,000. Then I would have recorded it as it would have been like this then. So then this would have become what? Our compound journal entry. This would have been our compound journal entry. This much would have been our compound journal entry. 1,20,000. This will become a compound journal entry that started business with cash 1 lakh and stock 20,000. This will become our compound journal entry. So these are the 2 types of journal entry. This is the narration. This is the date column. This is the particulars. This is the page number of the ledger, amount debit and amount credit. This is amount debit and this is amount credit. Amount debit and amount credit column. The 2 aspects that is debit and credit. Both are coming under this, debit and credit. Amount debit, amount credit. So let's see this journal with an example. Let's pass one journal entry. Pass the journal entry in the books of Amit. They have given, the date is given May 1 to May 10. First journal entry is Amit started business with cash 1 lakh. First of all, two aspects of these transactions are, two accounts involved in this transaction are, one is cash and one is capital. And cash is coming in the business, cash is increasing, that is asset is increasing. Remember, when asset increases, debit. And capital, a liability, capital having credit balance, when increases, credit. So our journal entry is cash account debit to capital. Cash account debit to capital. Cash account debit, we will write 1 lakh, and to capital also we will write 1 lakh. So this was cash account debit to capital. This is cash account debit to capital. Cash account debit to capital. Being started business. This is the narration also is given. Similarly, the purchase entry. When we purchase goods from Jay 70,000, from Ravi and from Ravi in cash. From Jay, acha, this is a homework, that a compound entry in the homework. This is purchase goods worth rupees 10,000. Now purchase goods worth rupees 10,000 is purchase to cash, because accounts involved over there is purchase and cash. Purchase means it's an expense, that's why debit, and cash is going out from the business, that's why credit. So see, in the first case we had this one debit, and the second case purchase is debit. Third case, purchase from Ravi. Third case, purchase from Jay. Purchase from Jay will be what? Purchase account debit to Jay account. Purchase to Jay. Jay is the creditor, so we are purchasing goods 20,000. Purchase to Jay. Clear? Next, purchase is debit, and Jay being a creditor, that he is the giver of the goods. Our creditor is increasing, that's why credit. May 4th. May 4th is sold goods to Avi. Now tell me, who is the receiver of the goods? Avi. And what we are doing? We are selling the goods. Sales is a revenue. The sales revenue is credit. Avi is the receiver debit, or you can say Avi becomes our debtor. We will receive money from the debtor. And as we receive money from the debtor, Avi will be debited. So see the entry, Avi account debit, that is debtor, to sales. The amount is this. We have to give the narration for each transaction, students. I have not written the narration. You must write the narration while doing the sums. Now May 5th, paid Jay 1,000. Jay, who was our creditor, we are paying him. So our creditor is reducing. Creditor reduce, so we have to credit it. Remember, we have to debit it. Creditor reduce, debit. Or we can say Jay is the receiver, so Jay will be debited. Creditor reduce debit, or Jay being receiver, debit. And cash is going out, that's why credit. So Jay account debit, Jay account will be debit, and cash account will be credit. Always remember, in each transactions I have to write account. I have to write account in each transaction. Each transaction I have to write account. This also you remember, students. Each transaction, like cash account debit to capital account, purchase account debit to purchase account debit to cash account. Similarly, purchase account debit again to J account. Then again, Abhi account debit. You have to write this data. That's for your understanding. I have written Abhi account debit to sales account to sales account to sales account. Then J account again debit. Why? Because J was receiving the money. So J account debit. To cash account, cash is going out from the business, cash is reducing, asset reducing, that's why credit. May 6th, it is received from Avi, the amount due 2000. So we are receiving what we are receiving? Cash. So cash will be debited. Who is the giver? Avi. So Avi being giver, we will be crediting Avi. So cash account debit, cash account debit, cash account debit to Avi account, to Avi account, to Avi account. Cash account debit to Avi account. Then we are paying wages in May 7th. On May 7th, we are paying wages 3000. So when we are paying wages, wages is a nominal account. Nominal account, whenever or expenses are always debit. In golden rules also nominal account expenses are debit. So expenses account debit, that is wages account debit to cash account, cash being going out from the business. Cash is going out from the business. Similarly, we have rent received. Now, rent received is what? Rent received is, see, rent received. Received rent 4000. So we are receiving rent. Then cash is actually we are receiving. We are receiving cash. And rent is our income. Any income or revenue is credited as per golden rules or as per the modern approach. So rent will be credited. Again, the drawings, that means when due stock from business rupees 5000, the proprietor is drawing the stock from the business. So stock is reducing from the business, no doubt. So to stock, stock is reducing from the business. And one more thing, students, drawings is debit. Drawings is negative capital. Capital reducing, that's why debit. But we don't say capital account debit. We rather say drawings account debit. Or you can say that the owner is the receiver. He is receiving the goods. And we know in personal account, receiver is debited, debit the receiver. So drawings account is debit. Whatever law, whatever rule you apply, whether golden rule or modern approach, their entry should be correct. So I always prefer that for personal account, we should follow the golden rules. As well as sometimes in real account, what goes, what comes in. And in most of the cases, whenever there is assets, liability, assets are always debit, expense are debit, and liability credit. If you follow this way, then you will be able to easily do the sum. Next sum is bought furniture rupees 6000. So when you are buying furniture, then what is happening then? You are, when buying the furniture, then your furniture is increasing in the business. That means furniture is debited. Furniture is debited. Furniture account debit. And furniture account debit. And your cash is going out from the business. Cash being going out, we are writing cash account credit. We are writing cash account credit or to cash account 6000, 6000. So in all the cases, the first entry is debited. This is the way we will be writing. This is the way we are writing our journal, students. This is the way we write. Only one thing I left out, that is the narration, which you have to write for every. Like for purchase to cash, I will write purchase, goods purchased in cash. For purchase from creditor, we can write purchase goods from J. Over here, sold goods to Avi. Over here, for May 5th, it is J to cash means paid to J. Cash to Avi means we received from Avi. So we write cash received from Avi. Just simply being cash received. We should write customary with the word being, and we should give in the bracket. Wages paid, so being paid wages. Cash to rent means we have received rent. So being cash received, being rent received. Then drawings to stock, being drawings of stock, being proprietor drew stock. Then furniture to cash, being furniture purchased in cash. So these are the 10 entries I have given you, student. Please see and try to understand it. In our live classes, I will further explain you. And this is your homework. This is your homework. Journalize. Homework is there. Sanjay started business with 1 lakh, purchased goods from Jay and Ravi in cash. And other entries are there. Some compound entry is also there. Compound entry, how will you do? Purchase goods from Jay and from Ravi in cash. That means it will be purchase account debit 180,000 to Jay because Jay is the giver of the goods, and to cash. See, when cash is there, then Ravi will not be used. So purchase account debit to Jay 70,000, to cash 10,000. Purchase account debit will be 80,000. Similarly, all these entries you will be doing, and please show me the work as quickly as possible. And this is the end of your journal chapter. We will be doing live classes to make you more sums. We will do. Thank you, students.